Hi guys and good afternoon. It is the 31st of the 10th, 2023, 3:55 p.m. London time. So I hope that you are well wherever you're tuning in from today. Congratulations to all those that got in our recent private sale or pre-sale, however you want to put it. In case this video goes public, I'll keep that between us for now. But yeah, it's a big one, probably one of the best that we've ever had we've ever had the opportunity to access. So I'm feeling very happy, and I was happy to facilitate that opportunity for you all. So today we have a market review that builds on what came before. It's not going to be a long market review because I laid the ground in the previous video, and today we're going to go over a few very simple things. First thing is BTC from a daily, weekly, and monthly perspective. Then we're going to look how that drips down to alts. We're going to look at things from the inverted. Then I'm going to show you 3 very big leverage trades that I'm looking to take. And then we're going to talk about the VIX and the NASDAQ, okay? And what the scenario in the entire markets could be if we're wrong, and why I'm often securing portions at 2x in order to hedge for my bias bullish. My bullish bias. Okay, so let's continue. You have to forgive me if I'm mixing up my words because I'm very tired. We've had a lot to organize in the past few days, so I'm going to do my best here for you to be as clear as possible. And before we start this, I just want to say it is my intention to show what I do see, not what I want to see, and present the information in the clearest possible light so that it is effective for you. So without further ado, let's begin. So BTC has closed its weekly very aggressively above this previous key level, which means that given status quo in the financial markets holds, then our expected target could be anywhere above 41,000. But as you know by my calculations, I'm expecting closer to 50 pre-halving. That will be explored more in our bull market review that's still pending. From here, we're also pending a monthly close, okay? And people are saying that, okay, well, we have a monthly close into this key level. It might be resistance, and this entire thing might be a deviation. That's fine. But for the moment, I have nothing other than to assume that we're bullish and that we're going to remain bullish. And the reason for that is because of the large consolidation, the aggressive breakout, the way that the entire market is framing itself around what we estimated, the fact that price action here is taking long to sell off, and then it's engulfing all previous sell-offs with singular candles, which is opposite to the bear market. And basically this is bull market price action, yeah? That is why I have no choice other than to stick to my bullish view of the market until something invalidates that, okay? And I will talk about what that can be now, but we're looking for a monthly close above this key level, similar to the area that we're in right now, and we're good to continue. From there, we have the daily range or daily charts, which I'll go down to, and I'll show you the range that we're looking at and the whole of the market is looking at. You have your low here, you have your high. It's very, very simple. If this high is taken first, going into the monthly close, it's probably likely that we'll get some fuckeries after the monthly close and take this low. Similarly, if we take this low, then we can see movement higher. At the moment, price action is reminding me of how it used to act in 2017. In the bull market of 2017, we used to get perfect ranges like this forming, and then we would just, just constantly continue up far more than people were expecting. But generally bullish on this until the 31,000 region is lost. Now, if we are to consider ourselves bullish in the context of everything I've mentioned, then you're actually looking for a competitive environment. So a competitive environment means that orders are desperate to get into BTC at a discount, yeah? They're as desperate as possible. Meaning that if we were to get a very deep retest and we hung around there for a long time, it would literally be difficult for me to hold the same thesis. Now, whilst that is technically a bullish retest, I would need to be able to frame that in the mechanics of perhaps some overblown FUD that would lead me to buy that. But if there's no specific reason, no specific fake reason, for example, let's say there's an unconfirmed rumor and we dump and then it's confirmed, we can buy. But you know, if we were to head back down to this area and we spent too long there, it would worry me. It would worry me because at the moment it feels as if the market is competitive. Okay, and in competitive markets, they're meant to give shallow pullbacks, not deep pullbacks. Now, you could say, okay, well, wasn't the market competitive here? You could say so, right? You could say that, all right, well, on this breakout, the market technically was competitive and we still retraced quite a lot. But what you're missing is that we didn't aggressively close past this entire range. We didn't close through here. Here we've closed aggressively through the resistance area that we have been highlighting, all right? So I just want to point that out to you. And is there anything else to mention? There isn't much to mention for now on BTC other than I am maintaining my bullish bias. Now, on the opposite end of that, if we're wrong and this is all liquidity, then this is going to go back and it will take out this level that it front run earlier on. Okay, so I would suspect a move down to here, the key level that we were looking for prior, 22,000 to 20,000, should that fail. The warning signs will be there, hopefully prior, and if not, this is the reason why leverage is only played in windows, spot is secured on 2x so that the coins are free to hold, and in general, it's also the reason why we want to be prepared in case that happens. Because you could frame it just as PTSD, that we're expecting the market to take a shit, because it has done here, and we have been used to the market taking a shit, but it's just fear, right? That's just fear talking. We have nothing to show that is the case right now. Given that is the status quo, I have to use the status quo to make my decisions. Yeah, I have to do that. Status quo is structure is bullish. Total 2, total 3, total is bullish. All coins are looking fantastic. And the setups are there, right? If I don't take such opportunities and the market does rally, I personally would not be able to forgive myself because opportunities such as this are seldom in the market, right? They don't come across us much. You have to, for example, here, you have to endure the entire downtrend to get that window there. Here, you have to endure this entire consolidation to get this window here, right? The true money-making windows for easy capital are fair and few. They are not many, and that is why I continue to risk, even if there is the underlying fear. And the risk comes from the box comparison method. So logically, here's the reason to take risk. Okay, logically, here's the reason to protect. You fill them out as many reasons as you can possibly muster. And if you get an overwhelming case on this side and only one or two, especially when one of them is fear, yeah, then for me and the way I do things, it qualifies to take this action. All right. What do we have if we do not have risk to reward? The only thing we can do in the market is take risk and accept risk, right? So I just wanted to give you that blurb before I continue the rest of the video, because this is how I'm personally thinking about being exposed in a climate that almost seems a little bit too bullish, right? So given that's the case now, I want to alert you that we have some bullish news coming out in the past 24 hours. That BTC is expected to reach 120k this cycle, and that is given to you in a range where the premium has been negative. Okay, this current range looks distributive, and I'm expecting at some point a retrace back down because of that, right? It's struggling to go higher. Yes, the weekly and monthly are looking bullish for now, but it doesn't mean we can flesh out the trend in the first place. So for now, I'm expecting down on the daily and below, and up on the weekly and monthly. How will that affect altcoins? Well, the first thing I want to show you before we talk about that is BTC Dominance, right? And we have a lot of people saying they don't use this anymore. That's fine, but I do. So, Dominance is uptrending aggressively. It's uptrending aggressively. And danger area for Dominance is around the 58% region all the way to the 64. All right? And this is going to make sense in a minute. But as you know, we have been very bullish on BTC Dominance, I think since late Q1, right? And I remain bullish until we hit the 58% marker. This range, right, carried through almost 2 years, guys, right? So we had a suppressed BTC Dominance range for 2 years, and then we've pumped up. This is the key level, right? 59% to 62%. At that area, I expect alts to give a reaction. Now, how do I expect that to follow through? Well, I expect BTC Dominance to continue, right? So you see BTC Dominance has been going up with BTC. What I'm expecting, is for BTC Dominance to increase if we get a consolidation here, or BTC Dominance to skyrocket if we get a consolidation there. So in two aspects, I'm expecting an increase. When the increase comes, what I'm then expecting is that for a decrease to signal the end of the local BTC trend, right? Or I'm going to assume that. So let's say we move to here and then BTC is, I don't know, at 31k and we're still moving up. If BTC starts to skyrocket but Dominance starts to fall, that is the signal for me. Not only, of course, the alt season is here, which I will preempt anyway, but it's the signal for me that the BTC trend is over. If we look at BTC and we look at this previous area, right? BTC Dominance started to tank, right? As we approach the top, right? I'm going to say that again. When BTC hits a blow off top or a relative top in an aggressive uptrend, it often will alert you by maintaining its price action but money flowing out of it into altcoins in order to multiply that, right? And the reason money flows can be because the BTC charts are looking good, it can be because market makers are doing it, it can be because of any reason, but it's often what happens, right? It's often what happens, and it becomes a domino effect. So that is what I'm looking out for. And if you look at, for example, alt BTC charts, they're looking very good. So an Alluvium is an example, right? Huge bullish divergence, and we have, you could say it's a change in angle, but only slightly, right? So price is trading in this region right now, and it has been on a downtrend for a long time. Whilst charts like Alluvium USDT are what? Right? Also doing the same, but breaking structure. The question is, right, do we think that BTC is going to go another 3x from here, 2 to 3x? Unlikely. So I think a lot of the gains are going to come from alt BTC when BTC Dominance finally starts to hit an area of significance. That should look like a triple dominance on key altcoins in their BTC pairs, but more appropriately, this is what I'm expecting, right? This is where, you know, people are saying that it's irrelevant. I don't think so. I think ETH is going to tank. It's going to hit here, and if we are pumping with BTC Dominance, which is going to be likely at that point, then I believe that will more appropriately signal the time for a dominance switch. That should make perfect sense. Now, if a dump is happening, which is happening just as we speak, what is expected? Okay, very simple. So for this, for help with this, I am putting on what? Inverted charts. And the reason I'm doing this is because it helps remove an element of fear. So if you look at aggressive charts, I'm using Floki as a a standstill here. It's aggressively downtrending, right? Aggressively downtrending. And this blue path here is what I'm expecting for most altcoins. Right? I'm expecting them to aggressively dump within the current area and then continue. What that looks like, simple. You take the impulse, you take where the impulse breaks, and you plot out the 1-to-1, and then you look for the closest liquidity next to the 1-to-1, which would be the 294 for this specific coin, right? This is probably going to align up with the moving averages, but we can check. Sorry, 1 second. Right. So if I'm to coin that daily liquidity is around here, it would move to meet some of these moving averages, but I don't really use them too much. I just use them to show trend switches. But I would be comfortable to add to positions if we can move to that general region there. A little bit messy, apologize, but I think you understand it. And the same thing is to happen to every other coin we're looking at, right? So if you look at Link, for example, so Link has had trouble getting above the 11.8 area. It's not possible for that to happen right now. We've attempted 4 times and had a big rejection earlier today. Might be forming some ascending wedge, but I think more appropriately is looking to just slide 5 to 10% before continuing up, right? And the same applies for Pepe. Something like this perhaps, and then a move up to take this area. Yeah, to take this general area. What other coins can we look at? Alluvium. So actually I'll get onto this in a minute. But if we look at other coins, look at some easy ones here. Yeah. If we look at Woo, for example. Woo has aggressively broken out of a trend, okay, a long downtrend after a first weekly impulse. So if we plot that on, the closest liquidity would be right here. Doesn't have to take it out, but something like this would be ideal in the scenario of a Bitcoin panic. Okay, these are in the context of monthly candles. So within a month, a lot can happen. Yeah, the month can open up, it can form a wick into the previous monthly range, and then continue up. Right? So, TDLR, I'm looking to buy the dip on anything that I've taken partials on. Total remains in a mirror of BTC, as is obvious. If we look at total 3 now, the same still applies. The same idea for me still applies, right? We have a breakout, and this represents the market in general, right? I prefer total 3 because it removes Ethereum, which tends to, these days, move not in tandem with other altcoins, as we've seen in the past kind of 2 weeks, right? So we have a low, lower low, higher low, descending structure, and a break of that structure, right? If we're looking for rebuys, we look here, right, which is around 343 billion. And the target for that, target 1 would be 413 and be 455. Now this is in the short to mid term. In the long term, I'm focusing on maintaining bags that I have secured already in things such as Floki, Pepe, Link, Alluvium, Rose, everything that we've been looking to trade or have been trading or investing in. I'm securing small amounts, right, and taking profit on the rest. Yeah, so let's say I put in 30,000 or 50,000 in Pepe right here at 2x. I'm taking more than half, right? I'm taking more than half. I'm taking usually 75% so that I have profit plus a free bag, if that makes sense. And the free bag doesn't need to be that big because they can be accumulated across multiple pairs and then subsequently left to run. Yeah, the whole difficulty in letting things run is size. So it's not having profit from the investment itself, but it's also having too much size. And what taking 75% does for you is it allows you to have some extra profit to rotate elsewhere, plus secure free coins. And one thing about holding too is its opportunity cost. So your money is stuck in one thing and you're watching other things run whilst capital rotates. Right? And sometimes, let's say you've done 2x on something, it can take another, a great deal to 2x it again, rather than taking money out and putting it into something that's just about to 2x. You understand? So the whole 50 to 75% captured and stash the rest away in this current climate is the best strategy possible. I've done lots of thinking. That is the best strategy possible because it also protects you if the market goes through scenario 2 that I covered, where, for example, as Crypto Bullet has recently tweeted, the guy with the massive channel, things moved down to here in mirror of the COVID crash, which was here. To conclude the video then, I was going to talk about one last thing, which is the VIX. And basically, the volatility of the Nasdaq / S&P, that's what BTC is correlated to. Okay, so we need to be careful that volatility on this doesn't start to snap. Right, it doesn't start to snap. I'll go through that in a detailed video another time. But if I, for example, get the VIX up right now. Alright, I'm not going to go through it because it's going to take a while, but if you plot, volatility snaps after long downtrends in the VIX, what you'll find is that you'll find the moment volatility starts to snap, right, the Nasdaq dumps, and BTC can do also. With extreme volatility snaps after long depressive down periods, BTC likes to do that also. So if we look at this, right, and again, this is just rough for now. I'll post a clear review on this soon. Right, it's too unclear to show you right now, but I'll show you what I mean before. Basically, we're good in the crypto markets, unless the Nasdaq volatility starts to skyrocket, because that is what comprises risk off, and that's the only reason why I'm ever shaking on my thesis right now. Other than that, I think we're going much higher. Okay, I'll walk through the VIX in a different video, because just drawing a few lines on it compared to the study I've done right now does not do it justice. All right. Thank you for tuning in today, guys. Have a lovely day. Peace.